Hey traders. So there's been a lot of talk about index reconstitutions, and people began talking about this because of Tesla. And of course, Tesla got added to the S&P 500. It's finally confirmed. This announcement happened in August. I think it was on the 12th. And of course, the stock went up from there because this was a bullish case. If something is in the S&P 500, that means that whether they like it or not, fund managers have to buy the stock to put it into their indexes. And every time that average investors put a little bit of money into their 401k every month in index funds, they're buying a little bit of Tesla, just like they're buying a little bit of every other stock. So, the very good question that a friend of mine asked in one of my social medias was, is this a trade? In other words, when stocks are added or removed to indexes, should we buy or sell them? It's a very good question. Well, let's look at that. Let's see if that is actually a trade. So we can look at some things that happened recently. And this is an article from September 4th, basically when this announcement came out. So there were 6 changes to the S&P 500. Etsy, Teradyne, Catalent, I don't know if I'm pronouncing it right. H&R Block was removed, Kohl's removed, and Coty was removed. If you want to do some additional research, you can go and look on the Wikipedia article for the S&P 500. It has these changes, and you can go and backtest some of these and see if these changes were leading to immediate movements in the stock. In other words, was there a trade there? Bear in mind that the addition, September 21st, date was the date it was actually made the change, but you probably want to look at the date that the announcement was done because that's what everyone's going to know about it, and that should be the move date. Let's evaluate it. Let's see on these 6 companies what happened on the day after September 4th when everyone knew that these changes were going to happen. Went ahead and made a list in TradingView right here. First, let's look at Teradyne. So the day that it was announced was September the 4th, and the Monday, September 8th afterwards, it actually opened down. So we would think by being added, this should have been bullish. And in the longer term, it's been bullish, but so has the market. What about Etsy? Well, Etsy, I charted out last night because I was at a Christmas party and the host was raving about how she had found every decoration, which were pretty nice, and every snack, which was delicious, on Etsy. And she said, quote, I spent all my free time on that website. That's a pretty bullish thing to say. Unfortunately, I think it's gone. Ugh. But anyway, maybe it'll pull back. Looking at September the 4th and the 8th, well, they didn't really pop bullish from that date. It has gone bullish since then, though. CTLT, again, actually gap down, up a little bit, but no real immediate reaction to it. What about the stocks that were removed? H&R Block? Well, it was in September that it was removed, and it's actually up a little bit since then. Kohl's? Well, this is actually up a good bit since it was removed. Coty? A slight down move, but big up move after it was removed. So I'm not seeing the trade immediately. It seems to me that the stocks themselves and the prevailing market sentiment are far bigger influencers than the addition or the removal. And there's something else that you should know about the S&P and what makes it up. Of the 3 that were added that we're looking at, let's look at a little bit wider time frame. Well, it's pretty clear that they're going up. They are bullish. The stocks that were added are bullish. The stocks that were removed, well, not so bullish. They're actually quite bearish. And this is going back in time many years. They've not been doing very well at all. They've actually been in a pretty sustained downtrend for the last 2 to 3 years, these stocks that were removed. And that's something important to note about the S&P 500 index itself. When quantitative traders are doing their research. They have to be very careful not to use just S&P 500 component stocks when they're doing their back testing. That's because of the phenomenon of survivorship bias. Standards and Poor's, when they're constituting their index, they are selecting companies that are likely to survive, that are likely to stay in business. They take out companies that are failing or potentially failing. There is a natural bullish bias to stocks that are in the S&P 500 because they're selected for being bullish stocks. So that's why the S&P 500, if you use it as a metric for the market as a whole, is not all that entirely 100% accurate, as many people have cited this year, where one of the reasons the S&P 500 has been so bullish is because of its Apple holdings, whereas a lot of the stocks, I think at one point 495 of the 500 companies had not yet retested the high, even though the S&P 500 had. So watch out for that survivorship bias when you're thinking about stocks that are just inside the 500, or use that to your advantage either way. But as to the question of, is there a trade? Is there an immediate thing that we can profit from just by looking at these index reconstitutions, additions, and subtractions? I don't see it readily apparent to me. Now, there's a podcast that I want to plug, episode 207 of Chat with Traders, Rishi Narang. He talks about a quantitative strategy involving the reconstitution of the Russell Index, but that's more in the weeds. That's for you to go out and do some research on. So, hope this helps some people, and do your own research. Good luck with your trades.